Hi everyone, welcome to Digital Energy. Today was FOMC day, so in today's video we're going to be talking about the FOMC meeting, the comments, how it affected the market. Then I'll share with you some of my thoughts about the market in the immediate short term. Please stick around until the end where we will be discussing predictions for the price of Bitcoin and Ethereum 8 years from now in the year 2030. Thanks for joining us here at Digital Energy, where we talk about Bitcoin, other crypto assets, and the incredible crypto revolution that's sweeping the globe. Today, as I mentioned, we saw the FOMC day, and I'm not sure about you, but I was kind of expecting what we saw. I was expecting a walk back from the very hawkish comments that were released back in January, because if you remember when those minutes were released, the market sold off and we were in a pretty good downtrend for the next several weeks. And the political powers being what they are, I think the message was clearly sent to Mr. Powell that, hey, in your comments today, you better get it right. You better walk it back a little bit, because if you don't, the markets are going to continue to object. And with us being in an election year, with the Fed needing to show some sort of action to show that it's concerned about inflation and fighting inflation, but also the fact that any really hawkish comments are going to tank the market, the Fed is really being asked to walk a very thin line, a razor's edge, if you will, because if they don't get it exactly right, the markets are going to crash. If they show that they're not interested in controlling or being too dovish so that inflation continues to go out of hand, people are going to still be concerned. But one thing about it is the only thing that people hate more than inflation, it's a recession. And when markets crash, that's where we're headed, is recession. So again, I was not at all surprised that they didn't raise the rates after saying they would. They've pushed that decision out to March. And will they raise rates in March? Maybe, maybe not. They'll continue to talk about it for sure. But the one thing that was very noticeable is there was really no talk about both raising rates and going directly to quantitative tightening, as opposed to easing or just tapering the easing. And I think that was the combination back on January 6th that sent the markets in a spin and caused them to sell off. So I think you saw today an effort to walk back some of that hawkish talk in order to move the markets to stabilize here. So where do we sit? What did we see happen? Well, as I mentioned earlier, we saw a big snap up when the comments were first released, especially in the crypto markets, but then we've sold off. Here you can see, if we zoom in here, this is the candle for today in Bitcoin, and you can see that we spiked right up to 39,000, and then promptly we just have kind of bled off and actually finished the day lower than where we started. And this is the candle that we're seeing now that's been established over the last several hours. Really not any impressive volume, just kind of bouncing around here at the $36,000 mark. And so, with now the FOMC meeting behind us, what do I expect to see? Well, I'm really expecting to see kind of some choppiness moving forward, but ultimately a retracement. I think what I'd like to see is us putting in some higher lows, then some higher highs, and eventually getting above this $40,000, $43,000 mark. If we can do that, then I think we're off to the races up to 50, consolidating at 50 to 52, and then possibly a retracement back down after that. I don't see us in the immediate short term setting an all-time high. I think it's too early. I think we're going to consolidate for the next several months, and at least until the March meeting, when I believe in March we will see a quarter point rate increase. But of course, the Fed today said they're going to stay nimble. They're going to let the data that they see moving forward dictate what they do. But ultimately, since we are in an election year, I don't think we're going to see any major hawkish action moving forward. So I think this will remain a great time to continue to accumulate if you're a long-term holder. And I think out there, I am a long-term holder. I am accumulating. I don't sell very often. I reserve a very small piece of my portfolio of cryptos to sell off if there's a blow off top, so I can have some cash to pick it up when it inevitably goes lower. But I think that it's important to have that kind of mentality. If you're nervous, try to back up, expand your time horizon thoughts, and think about what you're really doing with your investment. Do you believe in the cryptocurrencies? Which of those do you really believe in and that you would be willing to hold long term? And maybe to give you a little bit of some motivation to be that long-term holder, to be that hodler, which I think ultimately helps the market. I'd like to talk about a press release from ARK Invest, who you may be familiar with, and they came out today and basically said that they foresee a path for Bitcoin to become worth in excess of $1 million per coin within the next 8 years by 2030. In fact, they predict about 1.36 million. And you can see here on this graphic, I thought it was really interesting. They're laying out 7 different use cases for Bitcoin. They believe it'll be used as remittances across the world, that it'll be used in emerging markets for currency, that it will be an economic settlement network, it will be a nation-state treasury asset, it will be a seizure-resistant asset, which I believe it already is, and institutional investment. We're seeing more and more of that, of course. We're already seeing Bitcoin being used in corporate treasuries, and I think their estimate there is probably low. And all of these things are related in some measure to what I think Bitcoin's primary use will be, and that is as a form of digital gold. I do believe that Bitcoin over the next 8 years is going to take a very large percentage of gold's market cap, because gold just has proven not to be a great store of value anymore. I think because of its limitations and the derivative markets that have been built up around gold and how it's manipulated with paper gold, etc. It just hasn't really been the flight to safety that it had been used for in past decades. So I do think you're going to see Bitcoin eat into gold even more than 50% in the next 8 years, in my estimation. Ultimately, I believe that Bitcoin is going to flip gold. I believe that gold is going to be reduced to an ornamental metal, a metal that's used in industry, and that will be the extent of its value. So I do see its value dropping. It's essentially losing its store of value component, and that being gobbled up by Bitcoin. The other interesting thing about the statement made by ARK is they also foresee a path for Ethereum to rise in value to about $180,000 per coin by the year 2030. So a couple of cryptos that ARK Invest has a very bullish outlook for over the next 8 years. So perhaps that'll help you to have a longer term mentality to weather some of these pullbacks. Now, will we go up from here? I think we will in the short term. I do think that we probably will trace lower and could go below the current levels down to this $30,000 level. Let me know your thoughts in the comments below. What do you think the market's going to do? What did you think of the FOMC comments today? Are you a long-term holder? Do you use another type of strategy when you're holding? What are your thoughts about the market? So with that said, just remember, do your own research out there. That's important that you have a plan in place for when things get crazy. Don't trade emotionally, and protect yourself out there.